Welcome back everyone to another quick stock analysis, and today I'll be looking at Beyond Meat.
I'm amazed how many people own stocks. I'm amazed how many people own stocks.
Welcome back everyone, my name's Paul. Now today we're going to look at Beyond Meat on a quick stock analysis through fast graphs. Beyond Meat is a plant-based meat alternative. Anyone tried the burgers? I've tried them. Alone, the burgers taste horrible. They taste really crap. But when you mix them with a lot of other things, you can actually make them taste quite good. So it's not that bad. The thing about Beyond Meat for me is it's very, very expensive, and I haven't been able to get past that yet because it doesn't taste good enough for how expensive it is. Now, because this is a newish startup growth company, a lot of the fundamentals don't matter. They just apparently don't matter. But just a reminder, what I do look for in a stock: I look for revenue growth, I look for Ebitda growth, I look for justifiable debt, I look for free cash flow. Cash is the most important thing to a business for me. Then I look at some analyst estimates, and then finally I'll try and figure out a valuation. Genuine impact rates Beyond Meat as a low quality company, and I kind of agree on that. It's also an extremely expensive. There should be extremely expensive here. There's just very expensive. And we'll go a bit deeper right now to figure out why Genuine Impact thinks this company is so expensive right now. Okay, so it looks like Beyond Meat is trading at $129, and that makes it an 8 billion market cap. That's quite a lot for a company that doesn't seem to make money at the moment. Let's take a look through fund graphs. And there isn't a ton of data on Beyond Meat because it's only really been public for 4 years. And let's just take a look at the current ratio to see what it's like. And its current ratio right now is 3 times, which is good. Current ratio is an easy measure to determine whether this company can pay off its short-term liabilities. It's essentially current assets versus current liabilities. It basically tells you whether this company can pay its bills for the next year. And currently Beyond Meat is sitting close to a 4, which is good news. It shouldn't go bust anytime soon. First thing I look for is top line revenue growth, and this looks pretty good, growing on average 120-130% per year. That's, of course, exceptionally good growth, but we've just got to remember that this company is still very new, and it's only really gone from 16 million in revenue to 407 million. There's no way that that sort of revenue is really justifiable for an 8 billion market cap right now. But we are seeing growth. We're seeing quite good growth, and obviously that is an excellent sign. Next, we have Ebitda growth, and this company is clearly not growing its profit margin. 23, 22, minus 22, 12 million positive in 2019. Not sure what that was about. And then again, minus 16 in 2020. So technically there's Ebitda growth here, but it's way in the negative. And this for me would be quite a bad sign, because not only is it negative, and with a growth company, it doesn't necessarily have to be positive. The profit margin and the Ebitda growth doesn't necessarily have to be positive, but it should always be going closer to zero. And at the moment, it doesn't seem to be doing that. A good thing about Beyond Meat is its debt, to be honest with you. I know it is growing. It's only 40 million though. That isn't a ridiculous amount of debt. And also I think its long-term debt to capital is about 10%. So we've got quite a safe company as far as debt goes here. It's certainly drawing in more revenue than its liabilities, so this isn't too bad. And finally, we'll have a quick look at free cash flow. Free cash flow is very important to companies, and we are currently... Wow, we are in not only in negative free cash flow, we are in declining free cash flow. I don't know how you can decline further than zero, but we're looking at 28 million, 33 million, 61 million, 71 million, and minus 95 million. So their free cash flow is actually getting much, much worse. That is a very bad sign for this company. Essentially here, we're looking at investing in a company that has a somewhat interesting product, I guess, but it's a company that is not making money. It's in fact losing money at a very, very heavy rate. Beyond Meat does not seem to be profitable, and I do know a lot about Beyond Meat. I have invested in Beyond Meat in the past, and I did very well off it. But when it became so over exuberant, and when the price became so massive, I had to get out because Beyond Meat isn't as good as what I first thought it was. Taking a look at analyst estimates, we can see that this company is viewed by a lot of estimates. We've got 19 in 21, we've got 18 in 22, 7 and 2 in 23 and 24. So this company is quite well covered by analysts. As you can see, Beyond Meat is priced so ridiculously. I'm just going to the custom calculator and I'm setting Beyond Meat at 100% growth per year for the next 6 years. And I'm setting it at a P of 50. Now, maybe that's a justifiable PE. I don't know. Currently, it's really ridiculous. But with the company's growth over the next 6 years, even if we set it at 100% growth and we set it at a PE of 50, this company still loses you 89% over the next 6 years. This company is so overvalued. I can't really put a price at it. I guess if I was really going to stab at what price I'd want to pay for Beyond Meat right now, it'd probably be about $25. That's what I'd be looking into. It's so interesting to see how excited people get over these companies when they think something's going to be massive in the future. I mean, according to FastGraphs, by 2024, you could be looking at a share price of $71. But if you were to buy at prices right now, that still leaves you a 44% loss. The Tattooed Chef is another one that looks pretty popular. It's doing a lot better than Beyond Meat by the looks of things. And I think it's a sort of similar company. It's much more of a proper plant-based vegetarian company by the looks of things. I failed to see a really good moat here. In fact, I'd probably say Beyond Meat has a much better moat than Tattooed Chef does, because at least it's got a product. The problem with Beyond Meat itself is I don't know how much IP it has over its burgers. I don't know how hard it is to create these burgers. I mean, there is a real reason why McDonald's and Tyson Foods and Dunkin' Donuts have all picked Beyond Meat up and then dropped it again. There's got to be a single reason why. It looks like Beyond Meat has recently been picked up by McDonald's again, Pizza Hut, Taco Bell and KFC, so that's very good news for them. But Beyond Meat has always had real scalability problems, and that's I think why McDonald's didn't go with them in the first place, because they really will struggle to keep up with demand. They're also extremely expensive right now, so that probably didn't fit with McDonald's brand. But they're obviously seeing something right now, and it all seems to be coming together. And apparently it's official, the future of meat is plant-based. And if you're willing to pay stupid prices for Beyond Meat because you think it's the future, I don't think you're looking far ahead enough. Because I don't think the future of meat is plant-based. I think the future of meat is meat-based, but without cows. And you've got companies like Good Meat who also believe the future of meat is right here with Good Meat. It's got a very colourful website which has loads of animals and stuff. There's a lot to that, but we've also got Future Meat. Future Meat is another lab-grown meat. These are all companies that are growing proper, real meat, but without harming any animals. And this technology is not far away from being better, faster, cheaper. They have proven the concept of being able to make the meat, but they're definitely nowhere near the scalability. It costs a lot of money to create these meat substitutes right now. Or, well, they're not really meat substitutes, they're meat, but they're not grown from an animal. And I think when you're thinking about the future of food and future of protein, this is where I will be thinking, and these are the companies I'm looking at investing into. Unfortunately, none of the companies like Future Meat, Memphis Meat, Good Meat, none of them are public yet. And also recently we've got Eat Just, not Just Eat. Just Eat is the delivery company. This is Eat Just. They recently became approved in Singapore with their first, it might have been chicken or fish, I can't remember. And it looks like they've just received $200 million in VC for their cultured meat and their their plant-based egg products. So Eat Just are another company that make a lot of plant-based foods, but they're also very much into the cultured meat at the moment. This is where I see the future of protein products, the future of meat. I unfortunately don't see it with Beyond Meat. I do think there's always going to be a place for Beyond Meat, definitely, but I think it's easily going to be disrupted within 5 years. Future meat, lab-grown meat, cultured meat, whatever you want to call it, it's less than 5 years away from being properly scalable. So I think Beyond Meat is already being disrupted. And while I do think that Beyond Meat is going to be somewhere in that equation, I don't think at this time it's a good risk to take. But trust me, if something like Future Meat or Memphis Meat went public, I'd probably be all over it. But then again, even those companies will go massive on IPO and they just won't be worth getting into because you won't be able to tell which one's going to be the best one. So for this reason, among a lot of other reasons, I currently invest in Tyson Foods, who also has this thing called Tyson Ventures. And they have a lot of investment in Future Meat, Memphis Meats, loads of other companies. And I think they're going to do a lot more to really solidify themselves as the future of protein products. Thank you very much for watching, guys. And if you enjoyed this video, please feel free to like, subscribe, and invest.
I'm amazed how many people own stocks. I'm amazed how many people own stocks. The sucker's going up.